And good afternoon. Welcome into Market Talk here on this Tuesday, March 29th. Thank you for joining us, making us part of your day today. I'm your host, Jesse Allen. Find us online, markettalkag.com. You can find all of our streaming sources there, Spotify, Apple Podcasts, iHeartRadio, so many more. You can also find our YouTube channel there to watch the video version of the podcast each weekday. You can also find the latest news of agriculture, our social media links. Give us a follow. Plenty of stuff on the website, markettalkag.com. Well, another day of risk off trade with the grains sharply lower here throughout. And also, we saw hogs lower, cattle, the only market today that really were in the green. We have plenty to look at here, plenty to discuss going on in the markets. And of course, USDA numbers coming up on Thursday. To help us go through all of it and try to make sense of it, our good friend Matt Bennett with agmarket.net joins us this afternoon. Matt, good to have you back on, sir. How's things going for you?
Pretty darn good. We're just navigating our way through a nice, quiet week, of course, but it's kind of crazy. Kind of crazy to see these markets today, kind of a risk off day. And, oh, I don't know. We've got peace talks, that supposedly ended with no ceasefire, but more of I guess, a very clear objective as far as what Russia wants out of the deal. And so, my personal opinion, whenever I watched these markets earlier today, you've got corn locked down the limit at times. And I don't know, I kind of felt like, boy, I'd say there's a very strong chance that the corn market at least comes off the limit, just simply due to how this whole war situation has manifested itself. You've got headlines here and headlines there, and they don't always agree. And I don't think anybody knows which ends up sometimes whenever it comes to this whole war situation. But the oil market got lambasted early on as well. You saw wheat down 80 some cents. I mean, and then all of a sudden things start to turn around a little bit. You see the bean market. It was very reluctant to join the pity party. It really didn't want to move as sharply lower, I guess, as the rest of the commodities. And to me, that was maybe a little bit of a stabilizing influence. But regardless, the market was able to kind of pull off those lows. And, as you said before we got on here, kind of a risk off day, which is interesting because we've got a big day coming here on Thursday. And I don't think this kind of volatility we saw today is over with for this week, but not by any means.
No, very, very true. Well, and we kind of you mentioned how we came off the lows today. I thought that was encouraging because it felt like the computers, the algo traders, kind of took the momentum early, and then the human element stepped in a little bit and said, "Well, wait a second here. I mean, yes, we're trading these headlines, but at the same time, we have that big report coming Thursday. Maybe we're taking a little too much profit here. Maybe we need to kind of come off the lows a little bit. And I know it wasn't much, but maybe." A silver lining here because we are positioning ahead of those reports on Thursday, Matt.
Absolutely. I think one of the more encouraging things for me, I mean, of course, we know there's still a lot of old corn around, but when I look at, for instance, these corn, we settled over 20 cents off the lows, which to me is a pretty nice sign, for producers who are super concerned about Thursday. And if someone's probably lying to you if they tell you they're not a little bit concerned about what market direction might be there on Thursday. Obviously, there's a whole host of different estimates. I just saw one that came across my desk before you and I came on, where this was a survey-based approach with one of your larger grain systems, and it was both corn and beans below 90 million. So that was super interesting to me. Survey-based approach, so you hate to throw cold water on it, but there's a lot of folks that think we're going to come out with 184.5 combined. I don't think that can happen this year, even though commodity prices being high typically give you more principal crop acres. We know that. That's just the way things typically work. But we already have more principal crop acres. Even if we stay with a 180 mix, we know that wheat acres are up. We know that cotton acres are going to be up. Everyone's vying for the acreage. So, Thursday's going to be an awfully big day. We don't want to go to sleep. Of course, on the stocks report, there's no question that quarterly stocks will be very interesting. And, there's been times, I'll tell you, Jesse, a few years ago, I was doing U.S. Farm Report with Arlen Suderman over in Kansas City whenever we went in person, this, of course, pre-COVID days. And, the acreage report wasn't incredibly crazy by any means. The thing is that there's about 300 million bushels more stocks on corn than what the trade expected that day. And Katie barred the door. The market was down the limit. A very frustrating turn of events. And so we can't go to sleep on the fact that even if it's comes in close to expectations on corn acreage, that we're not going to see a wild and volatile day. Typically, this day is a very volatile day.
And I think to your point, it almost feels like, everyone's talking about the prospective plantings and the acreage number, and they're forgetting about the quarterly grain stocks, where, as you mentioned, arguably that could be a bigger market mover than the acreage number. Yes, the acreage number is important and everyone's vying for numbers, but that quarterly grain stocks number, in light of everything going on around the world and watching that South American crop, I'm honestly more interested in the quarterly stocks numbers than I am the acreage numbers.
Your quarterly stocks numbers halfway through the year, and most of them are saying that, stocks are maybe up a couple 100 million from last year, just a shade under on this same report, which I tell you what, we raised a billion bushel bigger crop than what we did a year ago. So if we truly are close to what these estimates show, then you've got to think that disappearance has been pretty strong, which we felt all along. Disappearance has been pretty good. I think it's going to be very interesting to see the flow of stocks from the farm to grain elevator systems and end users, which we've heard people have pretty darn good coverage. But the weather actually this winter has been pretty good overall. And so it would just make sense that you've seen a fair amount of that corn move off the farm. Now, I've always said that I like to see a farmer hold on to it on the farm if they can, as long as they can, just simply due to the fact this year's a great example of what, your bids for picked up off the farm or you delivering it off the farm versus being in the elevator already. If you've got cash ownership this year, I'll tell you, there's been some huge push for this corn market. But it's going to be interesting to me just to see how many of these stocks are actually out on the farm yet, how many of them are in town, and overall, if we come in close to that estimate, I think you've got to make the assumption that, our carryout last year at a sub 1.3, we could be heading back towards something like that, especially with the assumption many in the trade are still making, and that exports will be pretty good. Inspections were fantastic yesterday, towards the high end of the estimates. And so, if we continue to see an export sales, here and there on the morning wire like we've seen lately, I think that this corn situation could get pretty interesting as you move throughout the marketing year.
Very true. Very true. I know as far as the acreage goes, everyone's releasing their estimates. Agmarket.net, I know you guys had your estimates. You want to walk through what you and your colleagues are thinking we could see on Thursday's acreage numbers?
Yeah, and so I guess whenever you start to think about it, what's the acreage mix going to be? Well, first of all, I think I want to quantify how many total acres of corn and beans am I expecting. And so last year you had around 180. But this year you've got, like I said, over 2 million acres more wheat, probably anywhere from 300,000 to a million more cotton. And then there's no doubt that you can still see those spring wheat acres jump if the weather is conducive. I mean, we still see, Minneapolis wheat over $10. And I know people say, well, gee whiz, we've seen Chicago wheat at $13 lately. Well, you know what? Minneapolis wheat at $10 is a place that a lot of the folks I know in that part of the world like to sell wheat at. And so I'll tell you what, my personal opinion is that 180 still can be achieved, even though you've got these additional wheat acres, even though you've got the additional corn acres, because prices are so high. Guaranteed levels on insurance, very high. It gets a little more, I guess, complicated trying to figure out what that mix is going to be of corn and beans. I mean, you look at the board, and you're at 653 for these corn. I mean, come on. You've got to think that anybody who had prepay levels for fertilizer this last fall, they're looking at really solid profit margins. They can tell you they're not, but I can tell you they are if they had prepaid levels. Now, if you didn't get your anhydrous on, that's where we start to dissect this a little bit. If you didn't get anhydrous or nitrogen source on, then the price of your nitrogen more than doubled from prepay prices. That's where it's a little more complicated. If you're a producer that doesn't have a fantastic APH, call it a fringe area, call it what you want. Yes, these genetics are phenomenal these days. I know that. But if you're not in a high productive area and you're asking a producer to put $1,000 an acre into a corn crop, I think that's where you start to look a lot closer towards the soybeans. And so We said 90.7 on corn, 89.8 on beans, because we feel we'll still have 180 or even above, as we suggest with our numbers. We just think that mix, instead of being a 6 million acre gap, we think it's going to be significantly closer than that. I mean, there are survey-based approaches, like I believe Farm Futures had more beans than corn. And so some of those thoughts and ideas are out there. And so you certainly don't want to ignore them. I think that you're going to be looking at a fairly close mix. But Jesse, I will tell you that this report has shocked me many, many times in my career, and I am taking nothing for granted whatsoever. And so a producer who's looking at December corn after a rough day today, 63 cents above the spring insurance price, managing some risk up in here is a heck of a lot more fun than when you're already below the insurance price, or the insurance price doesn't guarantee you, a good situation. So let's not ignore the situation we already have. Yes, we'd all like to see a big rally Thursday, but I'll tell you what, if history is any indication, there's nothing that you can count on as far as Thursday is concerned, other than it's going to be a volatile day.
Very true. And I was going to go there. I was going to say this report, I mean, we could throw all the estimates and guesses at it that we want. USDA tends to throw surprises that can be very volatile. So it feels like if I'm a producer questioning, wondering what to do, managing some of that risk here at these elevated levels is just so paramount here this week, especially now after, as you alluded to, 2 straight days of risk off trading.
Absolutely. And so then that takes me to my next thought, is that I'll tell you, Jesse, let's say that we don't do anything and then the market's down the limit on Thursday because they post a 93.5. I don't think they will, but let's say they post a number that shocks the trade, or the combination of that and stocks drives us to a limit lower trade. Let's not get in full on panic mode just yet. I mean, quite frankly, this spring looks to me like, based on forecasts, that it could be a little later spring than what we'd all like to see as far as our timing of our planning. And so if that's the case, you've got to think those swing acres will go even more in favor of soybeans on down the road. So this is planning intentions. This is what the producer thought as of March 1. March has been a phenomenal month for the corn market versus the bean market whenever you're looking at new crop. But that should not be a part of this report. I'm not saying it's not going to be. It's just not supposed to be. It's supposed to be intentions as of March 1st. But as a producer, you got to understand that we're very early in the growing season. A lot of your meteorologists are still quite concerned about the way a lot of these models are lining up for the summer time frame. We still have a lot of drought in the western corn belt, even though thankfully we've gotten some relief, especially in areas like Iowa. But it's early in the growing season, so we've got to keep our heads about us and not make knee-jerk reactions, because if we're going to try to do a lot of marketing on Thursday, it's probably not a great time to be doing it.
Well, and to your point, weather here, we're watching things. We're early in the spring planting season in the U.S., but also on the other side of the coin, we're still watching that South America crop. It's Safrinha crop, not hitting the panic button yet, but there's some concern there as well. And there's been concern with a shorter, soybean crop already down there. So you couple that all together, and I still think there's a lot of premium to the upside just from everything I've heard and gathered. And, maybe you agree or disagree with that, but I think watching that South American crop as well is going to be another factor moving forward.
Yeah, I mean, there's certainly possibility. Whenever you look, the bean crop definitely was hurt down there. First crop corn, which is not a ton of acres, but it was hurt big time. And so that kind of puts the pressure on the Safrinha crop to be a big one. There's no doubt that the start to the year there has been pretty darn good as far as Safrinha goes, way better than what their first crop ended up looking like. But at the same time, that's a big reason why me and my team have been preaching all year. Hey, you know what? Get a floor under very profitable prices, but keep your flexibility, because it scares me to death to think that some producers might want to sell too big of a percentage into this rally. We saw it happen in 2012, and then producers weren't able to come up with the bushels. And I wrote about this in a piece not too long ago. Had a lot of people reach out and say, I'm glad you said that, because essentially what it boils down to, Jesse, when we get a chance to sell at levels we haven't seen in a long time, we want to sell, whatever, 5 truckloads or a truckload or whatever, and then 3 days later, it's another 20 cents higher. Well, let's sell, whatever. Let's sell another 5,000, 10,000, 20, whatever it might be. All of a sudden, we're 60% sold. And in 2012, we saw a lot of folks that sold 60% of a crop, but they only raised 40% of a crop. I'll tell you, that is a catastrophic situation if the market takes off on a parabolic move higher, because when you purchase those bushels back, you've got to make up the difference with the elevator. So you got to keep your flexibility here. You keep your wits about you and understand this is a potentially very explosive market. And so that what I just said, Jesse, makes people think, well, I'm not selling anything then. Well, let's just be smart about it. At least put a floor under it. At least put a floor under, because you don't know how many people are calling me this morning saying, man, I'm so happy I've got a floor under this market right now, because I'm not worried about it. I know this is not the end of the market. I know we're probably not done yet, but if it is, I feel pretty good because I at least covered my hind parts.
Great stuff. I want to talk livestock a little bit, Matt. Hog market has been strong today, a little bit weaker. I wonder, was that some squaring ahead of Wednesday's quarterly hogs and pigs report, do you think?
Yeah, you've got to think so. I mean, to me, hogs have been awful rich here lately. My focus, though, if you're okay with it, is to shift over to cattle. I mean,
Yeah.
I'll tell you what, our cattle on feed report on Friday was bearish. I mean, there's no two ways about it. You come in here yesterday and the opening wasn't all that bad. And then you see the market actually hung in there. Yes, we lost some ground on the day, but I'll tell you what, in my opinion, the feeders, fats, both have reacted very favorably towards what a lot of folks thought was going to be a limit down start to our week. So, overall, all the protein, whenever we're talking livestock, really a pretty good week so far. Yes, your hog report, I mean, there's no question that there could be some volatility around that. But I mean, you're still looking at 106 up to $124 hogs. I mean, these are price levels that, before the last several months, we didn't see all that often. So, I'm not saying we won't go higher, because I think this hog market's capable of doing anything, especially with the kind of business we've got, and especially with kind of concerns we've got as far as hog production goes around the world, quite frankly. But bottom line is meats are in a really good position right now. I think demand's strong, and I think people still have money in their pocket, and that's a really good combination.
Yeah, I think with both cattle and hogs, I would agree with you. I think demand is strong. I think there's a lot of potential in these markets for sure moving forward. Matt, great stuff as always. Any final thoughts you have for us here on this Tuesday?
No, just keep your wits. The thing is, as a producer, I know some traders listening too, but I'm talking to producers. We just have to understand we've got a ton of profit on the table if we've booked stuff early this year. If we've got run the numbers, run the math, and know what your situation is. And again, if you want to let the upside run, great. Get a floor on yourself though. Don't leave yourself hanging, especially when you've got war going on, you got world weather going on, you got all these factors you have no control over. At least protect yourself just in case we do get a black swan event, that you're not sitting around and later in the year saying, man, I could have had an incredible year in 22, but I chose not to do it.
Very true. Well, Matt, I know as well, you and the team at agmarket.net, you guys share a lot of great content, and you also help a lot of folks. And I know they could reach out to you guys very easily if they need a little personal advice about their marketing plan, can't they?
Yep. Agmarket.net, agmarket.app, either place. Great place to come find us, get all of our technology and research and contact info. So feel free to hit any of us up there.
Matt, appreciate the time as always, good sir. And we will talk to you again real soon. Thanks so much.
Absolutely. Thanks, bud.
Matt Bennett with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. That's going to do it for the Tuesday, March 29th edition of the show. I'm Jesse Allen. Have a great afternoon.